After crude oil witnessed this long stretching bear market since 2022, we have now seen a structural invalidation of this blue trend line. We have now seen a structural breakout to the upside. And as we've called it here on the 30th of December 2025, this has in fact been a swing low. And why we've predicted that and why this breakout actually happened is what we're about to discuss in today's video. Let's first have a look at the technicals and then at the macroeconomics and fundamentals, as well as geopolitics, to understand the underlying drivers of this commodity. Now, obviously, we've seen that low actually here at around $55 per barrel, and we've seen that structural breakout happening, and we're actually currently reaching to levels where we also have this resistance at around $94. And we do also see that beautifully leading to this decreasing volume. This is the visual range volume profile. And this is just beautifully showing you at which prices, which amount of volume is actually occurring. And so as the volume is currently decreasing at those levels right here, the chances for a deeper correction are certainly possible. Now, we do have to keep in mind that those supply disruptions are currently really the biggest factor concerning this commodity. And so the technicals do not really seem to be that important in today's video. We could obviously see a smaller corrective movement here, but to really understand those key economic drivers that we are currently seeing here at crude oil, we have to take a look at the geopolitics, because the Strait of Hormuz is a really important choke point for global oil trade. And in fact, we do see that in 2024, oil flow through the strait actually averaged 20 million barrels per day. And that is equivalent to about 20% of global petroleum liquids consumption. And so this is just a sentence to really understand the kind of magnitude that this has on the global oil markets. And now, to really put it into perspective, however, we have to keep in mind that concerning the destination markets, we have actually 84% of crude oil that is moved through the Strait of Hormuz going to Asian markets, right? And so we at Chronos have this thesis at this point that the US actually secured some oil in Venezuela right before the war started, and that actually gave the US the opportunity to now actually rise with those geopolitical tensions in Iran. We're now seeing crude oil prices obviously surge, and in fact the US is one of the biggest crude oil, in fact I think one of the biggest crude oil producers right now. And so the US oil companies do have some profitability right now as those prices are surging. And you have to keep that in mind. It's in fact a geopolitical play that is currently going on. We are seeing that Asia is obviously highly dependent on the oil coming from the Strait of Hormuz. And as this is really important waterway is currently being closed, that is obviously leading to supply disruptions. But we're also seeing that actually currently leading to massive price increases, not only at Brent crude oil, but also at VTI, which is the American sort. And you've just seen that massive breakout here to the upside. But to really understand what is currently happening, we at Chronos always like to take a look at the broader historical cycles. And so if you like this approach of taking a look at those weekly charts, at those long stretching cycles concerning energy, concerning commodities, don't hesitate to subscribe to our channel and click the like button to support us for work here on YouTube, and don't miss those new videos that are coming up daily here at Chronos. Now let's first have a look at the weekly chart here, and as you can beautifully see, we've opened up some indicators. For example, the copper to gold ratio, the gold to silver ratio, and also the gold to S&P ratio. And as you can beautifully see, whenever we've hit lows here at the crude oil prices, we've actually also hit lows at the copper to gold ratio. In other words, that has been a low point where gold ultimately outperformed copper by a larger magnitude. We've seen that actually sometimes being with a certain time lag, but it has certainly been in correlation concerning causality, because Whenever you do see those times of economic stress, it makes a lot of sense that gold starts to outperform against copper, because copper is more or less this industrial metal and gold more or less this safe haven asset, right? And that is exactly why we've seen those massive downward trends happening whenever we've seen lows actually starting to form out here at crude oil. Now, as we're currently seeing those supply disruptions, we're actually in an upward trend, right? Um, and we are still not bearish concerning crude oil. We believe that this certainly can go on for quite some time now. But we have to keep in mind that history is always repeating itself. And as we're currently seeing the copper to gold ratio, for example, fall significantly once again, as we're currently seeing the gold to silver ratio start to reverse once again, um, and also concerning the gold to S&P ratio starting to increase significantly, you have to take a look at what happened the last few times we've seen that happening. Concerning the gold to silver ratio, we have seen those lows at crude oil actually coincide more or less to highs here at the gold to silver ratio. And in fact, we at Chronos believe that this massive downturn here at gold to silver ratio and this reversal that we're now currently seeing here will actually also mark the next low that we are seeing at crude oil. So whenever we do see this ratio here, this gold to silver ratio spike to the upside, and in fact we might already see the beginning of it, whenever we do start to see exactly that happen, that is really a big signal concerning a crash happening to crude oil. Now, putting it together with the gold to S&P ratio, you can beautifully see that gold actually starts to weaken against the stock market before those crashes happen. And we're seeing exactly that actually repeat once again. You've seen that that actually happened here before the great financial crisis. You've seen that um, in a smaller magnitude happen here in 2015 and 2016. You've certainly seen it happen before the COVID crash hit, and you're also seeing it right now. And this seems to be one of the most important indicators overall in finance, maybe, because it just beautifully puts it into perspective. It beautifully shows you the market sentiment. This is probably one of the most important charts, because whenever you do start to see gold actually outperforming the S&P, that is really showing you the market sentiment of the investors when they are actually putting more weight on gold than the S&P, when they are when they do believe that gold is as a risk of metal actually better performing than the S&P. And that's exactly what we've seen happen here before crude oil crashed in the great financial crisis. And also we've seen it happen here in 2015 and 2016, in 2020. And we might just see that happen again, and we might see history repeat once again. And so we are currently seeing the copper to gold ratio fall. We are seeing the first signs of a reversal here at the gold to silver ratio, and we're also seeing the gold to S&P ratio rise significantly. And that would obviously suggest we do see a downturn happening to crude oil in the next few months or years. Now, obviously, we've just assessed the data concerning the geopolitics that would actually suggest we do see inflation happening here to crude oil, that we do see higher prices. And in fact, in the short term, we believe there is a lot of upside potential at crude oil. However, concerning the longer term trends, we believe that we're just seeing quite similar things to crude oil right now as we've seen it happen, for example, here previous to the great financial crisis. We expect to see this is the last inflationary boom before we do see a deeper deflationary crash happening to crude oil. You know, whenever we've seen those crashes hit, we've seen a divergence between copper to gold and crude oil. We've seen the crude oil prices go to the upside, and we've seen the copper to gold ratio go to the downside. We've beautifully marked that here with those blue trend lines. You can see those divergences, and that ultimately always actually led to a structural downward trend happening to crude oil. And in fact, it has been exactly the reason why we've actually called this being a swing low here back on the 30th of December 2025, because we haven't really seen that divergence happening so far concerning crude oil prices. We've just seen the copper to gold ratio go to the downside, but not really crude oil prices to go to the upside. Now, obviously, we haven't really predicted what is currently happening to geopolitics, but you may now understand why it's so important to take a look at those historical cycles, because history is always repeating itself. And so if you like this analysis and find it interesting and learn something new, don't hesitate to click the like button and subscribe so you don't miss future videos, and also support us here for our work on YouTube. Thanks for your support. See you the next time. Bye bye.